We did get a bit of a pause in terms of the rally on Wall Street. In Asia too, China has set its growth target at 5%.
Analysts believe there is a high growth opportunity in PVs, EVs and JLR, and the company with this move can capitalize on growth opportunities across businesses.
That's right. The Reserve Bank has barred IIFL Finance from sanctioning or dispersing any new gold loans.
And supports come in at the 40-day exponential for the Bank Nifty, which is 46,425, and then the 20-day, which comes in at 46,351.
In any case, we are putting in stronger systems in place to make sure that these deviations are minimal.
All RTC, hybrid and fixed dispatch renewable energy tenders over the past 15 months have all been under the reverse auction route.
So the first rates are there, 22,380.
Other life insurance companies are also likely to benefit if there is any favorable outcome that comes out of this thing.
The valuations are expensive. CLSA says the Nifty IT on an average is trading at 28 times forward multiple.
Yes, since we are a B2B business, a lot of revenue happens in H2.
The market's opened with a cut of about 30-40 points, but it's extended the fall.
Within the next quarter, we will launch the world's first CNG motorcycle.
India, on the other hand, REITs. Today, there are only 4 listed REITs.
There's a massive recovery which is underway, 130 points off the lows for the Nifty.
Well, that is the day so far. You're with us here on Closing Bell. You're with us here on the last hour of a trade this Tuesday afternoon. We're coming to you from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Reema and Surabhi here. Nigel is joining in from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. Quite a good recovery, right?
Especially the banks, right?
Particularly banks. It was down 300 points at the day's low, and now it's up 150 points.
Absolutely. I mean, and I think public sector banks are the ones which are doing the best, right? I mean, it's not PSUs in general, but PSU banks in particular. The index at 10 minutes back, the Nifty PSU Bank index was up about 2%. It's up 2.5% now. So it's coming up very nicely. So just a couple of points. You got a very, very quiet kind of session. Off the lows, of course, but very quiet on the frontline indices. Second day in a row. Small cap index, and we were kind of talking about this in the morning as well, that broader markets are losing steam, losing momentum, what do you want to call it, and lots of stocks are in a way letting out air, gains. So small cap index is down another 1% after yesterday's 0.5% cut. Declines outnumber advances by some 2:1. PSUs, of course, the point I made, and bank, the PSU bank index is up 2%. SBI is at a live high. PNB is at 130. Central Bank, Union Bank, so many of those names are doing anything between 4 and 6% or so. So that's the part of the market which is still looking up. Reema.
Hi, even on the Nifty today, the day's low was 22,267. So there's been a good 100-point recovery, nearly that, from the day's low right now. Though we're still in the red, but just by a whisker, 0.2% down on that. On the Nifty Bank, as we said, it's a nearly 500-point recovery. The Nifty Banking Index is now up 170 points. The Nifty PSU Banking Index is up 2.2%. But in the financial space, private financial space, HDFC Bank is leading the gains for the private sector. The gain is up close to about 0.5%. Other notable gainers include Tata Motors. Top honors for Tata Motors as it looks to split its PVCV business. Bharti Airtel has spiked up quite a bit. So it's a 3.5% up move on that. Bajaj Auto, M&M, Sun Pharma, ONGC are some of the big winners.
Okay, and we're getting news in that the official inclusion of India in the JP Morgan bond indices, it'll happen effective January 25. So that's when the changes will come in effect, 31st of Jan 2025. It's going to be quite a momentous day for the Indian bond markets to have India added on to that one very important global debt market index. So the announcement, of course, came in earlier. Now we know the effective date, how this will play out in the nuts and bolts of it. So that's important news coming in. By the way, in other news, guys, you'd be happy to note that the cheese you all are consuming in McDonald's burgers in the western part of the country is indeed cheese. Okay. They've got the clear sort of approvals in from the FSSAI, and that's actually helped the stock. I mean, on a more serious note, Westlife is up about 4 or 5%. But I guess, Nigel, beyond some of these stocks where there is movement happening because of news or otherwise, positive or negative, IIFL obviously is all negative, but the underperformance in the small cap space, that's still a story. Large caps are doing okay, but the small cap index, no sign of recovery there today.
Well, that's the point that we made even the last few days, right? So it'd be, that it's been such a good year that there is a temptation to take some money off the table. So valuations aside, that's likely to be the case, and that's perfectly played out in the last few sessions, and today is no different as well. Just in the last 1 month or so, the Nifty has come back in style. The mid-cap index, the small-cap index are doing a relative underperformance after seeing a super-duper run, in the last 1 year or so. Let's find out how do you trade the index, though. We have Mitesh Thakur who joins us. Hi, Mitesh. It's yet another day for the large cap names. What do you make of the recovery, particularly on the Nifty Bank? Where do you see resistance coming in? Because the last time around, it went to this vicinity of around 47,500, 47,600, and it couldn't conquer that mark. And then it corrected close to 1,000 points. From here, where's the resistance according to you?
Okay. Good afternoon. I think on the Bank Nifty, the day of HDFC Bank numbers, I think that was 17th of January. The stock opened gap down and the Bank Nifty also gap down, and I think this is that gap area which is what the index is again approaching, which is 47,600 to about 48,000. So I think the entire bank technically is resistance, but looking at the intraday pattern, I think which has turned strong, I think there's a chance that this time we might actually try and get past that. We had a failed attempt when the index made a high of we had a failed attempt on the 21st of February, and now I think we are showing better strength. In fact, I have a couple of banking names on the buy list. HDFC Bank, I think itself after a good correction is now showing signs of consolidation and a mild reversal. So buy with a stop at 1420 for targets of around 1475 here. And the other stock which I like is HPCL. It's just on the verge of giving a breakout. So above 532, buy with a stop below 524 for targets of 550.
Thank you very much for that. The stock of the day undoubtedly has been IIFL Finance. From morning, it's been locked in a lower circuit of 20%. Market capitalization of 5,000 crore has been erased. This is after the RBI directed the company to stop sanctioning or dispersing new gold loans with immediate effect. Ritu joins in with the details on this important story. Ritu.
That's right, the Reserve Bank has barred IIFL Finance from sanctioning or dispersing any new gold loans, even securitizing, assigning or selling the gold loans with immediate effect owing to material supervisory concerns. They can only continue to service the existing gold loan portfolio through the usual collection and recovery process. Now, RBI said that this action was prompted by material concerns in the gold loan portfolio of the company from deviations in certifying the purity of gold during the sanction of loans, even during auctions to recover money after default, breaches in loan-to-value ratio, significant disbursals of loan in cash amounts in excess of the limit that is allowed, the general lack of transparency in customer charges, and so on. And RBI said, despite repeated engagements with the management and auditors on this, there was no meaningful corrective action leading to this action from RBI. But RBI will review the restrictions after the completion of a special audit instituted by RBI and the rectification by the company of the audit and RBI inspection findings to RBI's satisfaction. Now, gold loans constitute nearly 32% of IIFL's AUM at more than 24,600 odd crores with 19 lakh active customers. So needless to say, a big hit for the company. Now, in a con call earlier today, the management indicated that RBI's comments were based on its inspection that came in January, and the action was taken by RBI very quickly thereafter, even as the company was engaged with the regulator to rectify this matter. The management said they were already in compliance with most issues pointed out by RBI, except in cash disbursals. Even there, they said that every other NBFC on the street is doing cash disbursals of more than 2 lakh in gold loans, which is far above the limit of 20,000 rupees. Also, clarifications that there were no governance issues whatsoever that RBI has pointed out, or any KYC AML lapses. Now, during the course of the call, management also repeatedly saying that while RBI's action may seem harsh, it will be good for the company in the long term and help it emerge stronger.
Okay, all right. Thanks very much for that, Ritu. Some strong words and very, very clear action taken by the regulator there. And of course, the impact on the stock price has been evident right from the morning. That's IIFL Finance. Pull up IIFL Securities. Hardly any recovery on that stock either. Group company, and the sentiment rub-off is negative even on IIFL Securities. Well, gold financiers, the other sort of competitors in the market, they've had a slightly better day today. We're seeing some gains, but both of these stocks, Muthoot and Manappuram, are also off the early morning highs that we saw. We've got Abhishek joining in. He's been looking at a lot of the business details when we're looking at some of the peer set companies as well. Abhishek, fill us in.
I'll also explain the reason why they are off highs. That was due to the con call lines that IIFL Finance did mention. To begin with, let's take a look at IIFL Finance. As of Q3 FY24, the AUM in terms of gold portfolio was about 31.9% or about 24,692 crores in absolute value. They had disbursed close to 9,000 crore of money in Q3 FY24 on gold portfolio, which means that the disbursements to AUM ratio is just about 10-11% odd, which is on the lower side for a product portfolio like gold financing. The gold loans yield are absolutely fantastic at 19% for IIFL Finance. Average ticket size, if I take into account the AUM as well as the number of loans, it works out to close to 1,30,000, which is on the higher side when you do a peer comparison as well. Asset quality pristine over there, 1.16% gross NPA ratio. Take a look at Manappuram. The book size is about 20,758 crores. 51.4% is about gold loans. So the total gold loans is about 20,758 crores, which is about 51.4% of the AUM. Average ticket size in terms of calculation shows to be around 83,000 rupees. The gold loan yield is very strong over here at 22.6% in Q3. The total tonnage that they have is about 58.2, and the asset quality with respect to gross NPA ratio is at 2%. Take a look at Muthoot Finance. The gold AUM is about 69,221 crores, which is about 97.25% of their overall AUM. So largely the AUM consists of gold financing. Tonnage is about 184 tons. They have a gross NPA ratio of about 3.6%, and in terms of yield, the overall blended yield of the portfolio is about 17.8%. Now, one of the key highlights in IIFL Finance conference was about RBI being uncomfortable with respect to cash disbursements of 2 lakh rupees, while the regulatory limit is about 20,000. So analysts do say that Muthoot Finance and Manappuram are also disbursing gold loans up to rupees 2 lakh in cash. So this has weighed on the investors, sentiments with respect to stocks opening as high as 8 to 10% and then cooling off. So this is a standard industry practice. Muthoot and Manappuram may also get impacted by this rule of average ticket size. Back to you.
Okay, Abhishek, thank you very much for that. Muthoot in the morning had opened up 10-11%, now is only up 1%. And even Manappuram General Finance, in the morning it was up close to about 8%, and now the gains have petered off quite a bit, just up 1.25% on Manappuram Finance. Deepak Shenoy, founder of Capital Mind, is with us now. Deepak, Nirmal Jain in the IIFL Finance conference call did sound defensive, to some extent. No liquidity issues at the group level. He said this is an operational issue. There are no governance or ethical concerns. How long do you think this entire issue will weigh down on IIFL Finance? Already 20% is gone. There is no opening of that lower circuit yet.
There isn't. In fact, I think, Rima, there's a fairly large sell on the list there. I think about 2 odd crore shares, which is more than 900 crores in value. But looking at we don't have an investment here, but one of the things that happened in the gold loan business is they're a very large gold financier. I think they're also relatively higher ticket. They're also in comparison with, so they have a fairly large churn. So about 7,000 or 8,000 crores per quarter is disbursed. In the first 3 quarters of this year, they've disbursed roughly 8,000 crores every quarter. And the loan book grows by only 1,000 crores. So there's about if there is no more lending for another 3 months, the AUM on the gold loan business should fall to 17,000 crores or so from 24,000 odd, simply because they're not able to give any fresh loans, but the current rolls will roll off, right? So you effectively have 32% of the book fall to roughly 22 or 23% of the book, and the book size will also fall. That is, I think, what's concerning short-term investors in IIFL. But if they're able to prove that the issues that they have are sorted, and they did talk about the fact that there was a difference between, say, the weight and purity at the time of granting the loan and the time when after a default, if that particular loan's gold went into auction, the checks were even more stringent. So they found that there was a difference in the purity and value, and they've tried to correct that by increasing the assaying strength at the branch level, and they are trying to demonstrate to RBI that that's the case. If they're able to do it in the next 2 or 3 weeks, then the impact is going to be very, very short term. But if they're not able to, then I think we'll have a longer term, at least a quarter or so, before RBI comes back and says you're okay. So it will just depend on how fast they are to act on this RBI notifications or clarifications, and they're able to get RBI to okay their operations on gold. Otherwise, they have to open a new line of business, and currently nothing else comes close other than home loans. But I think the yield there is substantially lower.
Okay, all right. Hi, Deepak. Good afternoon and good to see you. And Deepak, I wanted to ask you about Polycab. The stock had corrected to, I think, around 3,900, 3,800 odd. From there, it's bounced close to around $1,000. And technically now it's crossed that 20 DMA and it's on the verge of breaking the 100 DMA in terms of technical levels. I think our director will pull up that chart as well. How do you view this stock? Well-run company, everything going well, all guns blazing, talking about 20,000 crores of revenues. But that IT rate is an overhang out there. Your take?
Yeah, it's been a while now. In fact, at the time that we got the news, we took a preemptive kind of a idea to say exit until we get some clarity. We're going to wait a little bit longer to the end of this quarter to understand whether that IT situation is a one-off, as in they've done a raid and then there's nothing come out of it, or is it something more serious? If there isn't, then it's a good business. I don't think there's a problem with the core business as well. The surprise will only be in any kind of a regulatory overhang element from the raids that we have seen. Assuming that that doesn't materialize, then this is actually a good business. But because of that big overhang, we were invested otherwise. I think this is a great space to be in. FMEG. Multiple companies in this space. KEI is one, Polycab is another, a couple of other smaller caps, and of course Havells at the top. I think this is an interesting space to be in. Havells not being one that has been able to retain its market share on some of the wire products, but I think there's space for a lot. India will grow substantially from here, especially when it comes to commercial capex and some residential, building capex as well, that is already happening. So I think demand here is likely to grow. So positive on the space. On the company, the overhang is, beyond what I can assess from what I know. So we'll just wait for clarifications.
Okay. Deepak, hi, good afternoon. As we were starting the show, news came that the Indian bonds, government bonds, are also going to be part of the Bloomberg index. I think that's the same Bloomberg. It's called the Bloomberg Barclays Aggregate Index. It's much larger than by the way, the JP Morgan index. So the JP Morgan news came earlier. This also, I think in January earlier this year, the announcement was made that they are also included. But I think the date is out now. This is going to be early 2025. Obviously means more inflows. Maybe eventually a new buyer, right, for new funder for the government of India, and lower cost of capital overall.
Yes, I hope lower cost of capital, because there are other factors to that. But here's what the core thing is. 5 years ago, when the RBI said it would allow unhindered access to certain bonds, the problem has been, of course, that bonds, they could not buy bonds with less than 3 years to maturity, which is a little problematic for an index to add it. So they've added something that are called FAR, the freely accessible route bonds, which have been around for now about 3 or 4 years. So now you can access them whether they are 5 years to maturity, 1 year to maturity, 10 years, anything like that. The supply comes from the government issuing new bonds, typically because most of the bonds are held by banks today. The indexes have a very large amount of money running behind them. And because this is domestically rupee denominated, we don't have any currency risk when the government issues these bonds and foreign corporates, foreign funds buy them. It's positive for India in general, because you're able to diversify the holding of rupee securities and reduce the need for banks who currently put 18% of their deposits into government bonds. And then you can free some of that capital out for domestic lending. But given where we are right now, I think both two things are happening. Supply will come down, demand will go up. Demand is increasing because of the indexes. Supply is coming down because the government is actually issuing lower issues with lower issuance next year, at least from the interim budget. So you're actually going to see possibly a big move in government bonds. I don't think corporate bonds will move that much. So the spread on corporate bonds should actually reduce, increase. So the corporate bonds will continue to be a little bit higher. And at the current moment, even liquidity is high. The RBI had done something a few years back, 3 years back, where now they're required to buy back dollars and put rupees into the system. So what a system which was in deficit maybe a week back has actually gone into a surplus as of now, as of yesterday. So even that is changing on the short-term basis. So I think quite interesting from that perspective. I think very good for Indian macroeconomy in general.
Sure, absolutely. More foreign money chasing Indian assets and Indian bonds this time around, perhaps. Let's just quickly get some comments from bond market participants as well on this. We've got Lakshmi Iyer from Kotak Mahindra AMC, as well as Ashish Vaidya, who is the head of Treasury and Markets at DBS Bank, joining in. Ladies and gentlemen, thanks very much for this quick call. Ashish, if I could come to you, I remember when the JP Morgan announcement came in, I think the estimates were that anything between $20 to $25 billion can flow in with that inclusion. Now, how big is the Bloomberg inclusion and what could the fallout be?
Hi. I think important to understand that this is the Bloomberg Emerging Market Index. So this is a much smaller AUM under consideration. We expect roughly about 3 to 4 yards of money to come in because of this. The larger index is the global Bloomberg Index, and market was speculating earlier that it'll be included as a part of the global index. If that was the case, then obviously the amounts would have been much larger. But all these are increments, and I think it's like everybody is looking at India and India bond market. So this is something that will continue over a period of time.
Ashish, hi, good afternoon. Lakshmi, hi, good afternoon. Ashish, you said $3 to $4 billion. What was that? I missed that.
Yeah, $3 to $4 billion. Yeah,
$3 to $4 billion.
Because and this is the EM bond index.
This is but the index global. Is the bigger. It's called the Bloomberg Barclays Aggregate Index, right? The big one. And this is the EM part of it, is it?
Yeah, this is the EM part of it. Is what I understand. Yes, it's not the global index. If it was a global index, there's a larger AUM.
It's a much larger. Yeah.
Yeah.
I remember. The larger index had some $2.5 trillion of assets under management. So that's even bigger than the JP Morgan one. But Lakshmi is also with us. Lakshmi, your first thoughts?
Yeah, so I, echo Ashish's view. This is the EM part of the Bloomberg Index, where the total incremental amount will be roughly about $2.5–3 billion. The Bloomberg aggregate, where the total size is over $3 trillion. Probably this could be a baby step in the making. But yes, any form of inclusion is a welcome. When the announcement ab initio happened, the markets were speculating, as you rightly alluded to, it will be the larger index first. That would have actually shrunk the yields, bond yields, to as low as 7%, the moment the announcement came in today. But yeah, small steps are always a happy thing to be. And it also coincides at a time where, Indian currency is having a dream innings in terms of being the most stable currency across the world in the last 18 months. So I think all these ties up. From a long to medium term perspective, it will still have a positive rub-off effect on bond yields, which will get, only much more attractive from a foreign investor standpoint.
So, just a quick question to both of you. Since these inclusions will play out over the next couple of months, the Bloomberg one is in January of 25, and I think JP Morgan will happen sometime later this year. So that there is that happening at one end and liquidity coming in. And then we tie that in with, the expectation that second half of the year is perhaps the RBI will get a little more charitable with maybe a rate cut or maybe at least a more benevolent stance towards liquidity. So what does that mean for bond yield expectations, Lakshmi? Over the next couple of months, how would you expect the 10-year to behave?
So, yes, the positive spiel will continue, but bulk of the positive news is incrementally getting priced in, including the the lower the fiscal deficit, tighten lower borrowing program. While inflation in India is not really so much of a bummer or a concern yet, I think the broader narrative will get tied around how soon is going to be Fed in a mood to cut rates, which doesn't seem to be any time soon looking at the data coming out of the US. So I think from a bond market rate cut gratification perspective, I think there is still some more time to expect a rate cut. But I think the hope of that, and let's not forget, FPIs have pumped in almost 40,000 crores in the last 2.5 months. That's a bigger positive than the impending rate cut to our mind.
Since both of you are saying the expectation was for the inclusion in the global index and this is the EM index, Ashish, in that sense, I mean, since markets move on incremental news, this is at the margin a bit of a negative? If the expectation being built in was it's going to be the bigger one?
No, I think at the margin, I think it's flat to positive. It sort of brings in certainty, right? That money is going to come in.
Okay.
I think important point, I think like we mentioned, I think is very important that how the Fed behaves and how the Fed pivots. Eventually, what you have to look at is that Indian bonds will probably outperform other EM indexes. And I think that's going to be the reality, looking at the macros, looking at how much of supply is coming into India and how much of demand is going to be coming from the offshore FPIs.
Okay. All right. We'll leave it there for now, gentlemen. Ashish and Lakshmi, thank you very much, both of you, for joining us and quickly sort of clarifying some of these points. And it's good to speak with you. Thank you. We'll take a quick commercial break here. We'll come back. Market, I think, is still there, about 30 points lower, 22,375. Stay with us. Okay, welcome back. The market's down 30 points, so I mean, not really going anywhere. Let's just pull up quickly Bajaj Finance if we can. There's a sharp cut which has come on Bajaj Finance. Actually from the word go, if you look at where the open was today, it opened at 6,600 and has basically given up about 300 rupees through the course of the day on your screen. And it's a pretty sharp cut off the lows of the day by a little bit, but looking down. And the other one, of course, is RBL Bank, which is also down about 6% or so. It's done very well, RBL Bank. I mean, over the last many months or so. The low, for example, in December was 150. It's at 250 now. So had a sharp run up, but today is seeing a bit of a knock. More on this in a bit from now. We have Mrinal Singh, CEO and Chief Investment Officer at Intred AMC. Mrinal, great to have you with us here. Thank you very much for your time. Appreciate it. You know, I was just looking at the emerging business fund, the category 3 AIF. We have the sort of numbers and the fact sheet from you. It says that you are sitting on some 26% cash. Is that a... So I just want to start with that. If one goes by that, that kind of tells you that you are very cautious overall as far as markets go.
So, well, that cash has to be looked in the context of, trying to keep some gunpowder for potential opportunities and a proxy for large cap as well. So, although it might look like a large number, generally compared to what typically fully invested funds run, but AIFs don't have a strict mandate to be fully invested all the time. You can choose to take tactical calls. The India growth story obviously is very robust and long dated. So we don't see a doubt in that. We obviously do feel that as and when opportunities do emerge and the volatility that is expected in the market, we would like to have some gunpowder ready so that we can, make the most of it. And we have as a proxy for cash or proxy for large cap, we have kept some cash in that context as well.
Could you tell us, Mrinal, how old is this fund and have you created this cash recently or, have you been running this since, you've been keeping this cash for a while?
So this is a 2-year-old product now, and we actually booked some profit recently. So the cash levels have gone up a little, and we are waiting for better prices maybe. And we are currently working on some names that if potentially we do succeed in finding right prices, we would deploy those cash there.
Do you want to tell us where you booked profits recently, Mrinal, and what would be the, the themes that you're looking at?
So we did book profits in industrial names, some bit of industrials. We were thoughtfully very underweight in financials, so we moved some money towards financials of late in the correction. We've also booked some profits in some select healthcare names, more to do with business, and so on.
Okay. Mrinal, what is the outlook that you have towards technology right now? I mean, whether it's large cap, mid cap, because we're seeing some interesting sort of notes over here. And the whole question mark about whether the market is priced in too much of euphoria and optimism with respect to a turnaround. Do you have any positions in tech?
Yes, so we do have positions in tech, and I think very interesting space. Clearly, a lot of thumping that we saw in tech in the last 12 months pertain to the deteriorating outlook of US, tech consumers in particular. But then I think if we are willing to look across the horizon, technology looks very interesting. The seeds for next technology investments are already sown between AI, drones, IoT, and the likes. We are going to see a very long runway of investment in that direction. So I guess companies which are investing and creating capabilities in that direction would definitely merit investment. So technology as a space, although we have investments, we would look to add, our weights over there going ahead.
Okay, all right. Hi, Mrinal. Nigel on this side. Could you help us out with what are you looking at in technology? I can see Zensa Technologies. That's one stock that's making it to the top holdings list. If you could name a few stocks that you all are still positive on from these levels.
So, well, the name you took was something that we bought last year. The pecking order that you see is courtesy that stock having done well. It's in a time zone where most tech names have actually delivered negative returns. So a very alpha kind of allocation that we did. Clearly, we prefer companies which are working in the space of product engineering because a lot of new products aligned with AI in particular and ML are actually being worked upon. So there are some names in that direction. Plus, we do like the agnostic service providers, the typical large caps like a Wipro or Infosys or an HCL Tech. It's a matter of valuation where we step in. A couple of names do merit, they already reflect in our portfolio, but then a few more for an interesting price could actually make an entry.
Mrinal, auto is your largest relative overweight. I think you have about a 23% holding in autos in your emerging business fund. You've got names like a Hero MotoCorp, Amara Raja, you've got Maruti Suzuki, Tata Motors, which has now emerged as India's most valuable automobile company, doesn't find mention at least in the top 10 holdings. And there is that recent corporate development about splitting the two businesses into CVs and PVs. Why is it that TAMO wasn't, a part of your, at least the large holdings? And any thoughts on this particular development?
So, well, auto, if you notice carefully, between auto and auto ancillary is where the weight is. So it's a combination of those two distinct spaces. Auto ancillary is a sector that I would separate from OEM auto. And we are largely invested into names which have footprint into rural side of things. So be it the two-wheelers, be it the mass four-wheelers, and the supply chain, they are largely fed into the rural consumption patterns. We are quite gung-ho about rural consumption going ahead, and it is our way of stepping into that direction, because in the pecking order of consumption behavior, mobility is somewhere high up as rural spending will pick up. So that's how it is. It might look like auto, but it's our way of stepping into rural consumption. Particularly, TAMO in particular is a combination of CV and a lot of UK-based business. So we've kind of stayed away from it, not for any particular reason, but largely because our preferences were in this space, and we already were running a very large weight between auto and auto ancillaries.
Mrinal, you said that you were evaluating a few more ideas. Now, without you can name names, that'll be great, just for educational purposes. Or if you want to just talk to us about where broadly, where are the new opportunities, or will you plow money back into what you already own?
No, we would look for newer opportunities. We generally resist talking about names that we are under evaluation. So that I would avoid, but what you see, what is in the public discourse is something that we can talk about.
Any areas, or are these very idiosyncratic opportunities, or are these themes that we can talk about?
So it's a combination. We would clearly prefer product engineering space. There is preference for agnostic IT services providers as well, but that's on the large cap side. But then very, very idea specific names, per se.
I see. I got it. By the way, can the fund invest in some of these IPO, pre-IPO issuances as well? The pre-IPO rounds? Have you done it?
The mandate does allow, but we haven't done that up till now. We have looked at any offering, be it an IPO or be it an existing stock, as an individual agnostic, idea to invest in.
Gold loan business has seen some very aggressive growth. While you've had the traditional players like Manappuram, Muthoot Finance, banks too have entered this play, and there are many banks with a pretty large holding of gold loans. We've seen the RBI clamp down, at least on one of the players. Have you had a play on any of the NBFCs or banks purely on account of their gold loan focus?
So our preference has clearly been home mortgage. If you notice in the portfolio, there is one home mortgage name. There are no financials besides that. So our pecking order is home mortgage, secured lenders. No pure play gold, but that's not to do with that we don't like the space. We've just had mortgage, secured lenders followed by banks. That is how our pecking order has largely been in terms of preference.
Okay. All right, Mrinal, we will wrap it up on that note for today. Thank you very much for joining in. Good to get that perspective from you. The market, well, as far as the Nifty is concerned, the struggle is on, and that's thanks to the selling in large cap IT. That trend has not really changed, even though the bank Nifty is still sitting on a little bit of green. And the advanced decline ratio is still as negative as it was when we started the show. So not much changing, at least for the time being. Let's take a quick break on that note. We'll come back on the other side, and we'll get you a check on all the dealing room buzz, and then, of course, some more trades with Mitesh.
Welcome back. You're tuned in to Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, the markets, from the broader markets, in fact, there are things that are under pressure, but the headline index is pretty much okay. It's down only around 30 points odd. Good time to get in. Nimesh, today the banks are doing a relative outperformance. At least that index is trading in the green from the headline indices. But there is some pain pockets in the broader markets. How are flows?
So flows are positive. In fact, while the markets are consolidating, yesterday it was a positive bias. Today it looks like a bit of a negative bias. But unlike yesterday when I said, there are sell flows, today it looks like there is a bit of buying as well. And within that, there's going to be a small MOC basket as well in the last 30 minutes of trade. So maybe you'll have some impact on some individual names. But as you rightly pointed out, it's the banks which are doing good today. But even within banks, it's the PSU banks which have done well today. Both the FNO PSUs as well as the cash PSU stocks have done really well. And some of them are well bid as well. On the other side, a big of drag coming in from the NBFCs. We saw what happened to IIFL Finance today, locked at 20% down socket. And I understand there are more than 2 crore shares outstanding for selling, right? So that's the kind of selling which is there in IIFL Finance. And that actually had a bit of drag on the other NBFCs as well. The top 4-5 losers are part of the NBFC. So that's one space which is under a bit of pain today. Even the select IT names are under pressure. We saw a big downgrade coming in from CLSA, and that's having a bit of an impact on the overall IT stocks as well. But again, the big theme seems to be the PSUs. And within PSUs, the rotation continues. So we saw big moves in power PSUs. Today is a day for the PSU bank stocks to do well. So that space is doing good. But some bit of pressure is clearly visible in the broader markets. But unlike yesterday, the flows are marginally positive, is my sense.
Okay, all right. And Nimesh, at the start of the show, Surbhi said that at least we are sure that the cheese we're getting in our burgers is proper cheese. So for the time being, at least Westlife, that's one stock I'm looking at. It's moved to the high point of the day. But what else is on your list?
Well, Nigel, so a couple of stocks which are part of my list is where there are going to be large block deals very soon. So the first name is Samvardhana Motherson. The stock is at day's high today, but again, for the last couple of days, there was a very strong indication that a large block will come. The strategic investor is going to be a likely seller there, so maybe there could be a clean-out trade as well. So that's something to track in Samvardhana. The second big block expected is in Zomato as well. I said this a couple of days back as well that the lockup period has ended for the strategic investor, so maybe a large block is expected in Zomato as well. So that's something to track. The second name is NMDC. Within the within the PSU names, this is one stock which is well bid by large institutions. So expect high delivery volumes, and there is a lot of buying interest in NMDC as well as in NTPC. But NMDC stands out in terms of volumes today. The third name is Union Bank. I spoke about the PSU banks being well bid. Union Bank stands out, so big volumes on that stock and well bid as well from larger FIs. So expect very high delivery volumes in Union Bank as well in today's trade. And the last one is KPIT Tech. Within the IT names, KPIT Tech stands out largely on back of sell flow. So there is some selling pressure. Looks like some larger FI seems to be on an exit mode in KPIT Tech, and expect even there very large volumes today.
Right. Interesting list as always, Nimesh. RBL Bank we were discussing earlier.
Yeah.
RBL is down 7% now. I mean, that's a very sharp cut coming through. Are you picking up anything here?
Well, Prashant, couple of things. So there is a lot of chatter about a large block deal in RBL very soon. I spoke to some large holders as well, including the company as well, and doesn't look like there's going to be a large block deal very soon. So maybe there could be some rumors because of which the stock is under pressure today. But I was just looking at the shareholding pattern. If you look at the large holders of RBL Bank, the biggest holder with a 9.9% stake is Bain Capital. Now that's the rumor that maybe Bain would be a large seller, and hence the stock is under pressure today. But at least the feedback that I've picked up from my sources doesn't indicate that there could be a large block deal, or maybe a Bain is a seller there. If you look at other large holders, there is one mutual fund who owns close to 4.5% stake. There is M&M who owns close to 3.5% stake, and there are a couple of larger FIs as well. The only challenge, Prashant, is if this large block has to come in RBL Bank, which is 9.9%, none of these larger guys can participate beyond 5%, right? So, the largest mutual fund who owns close to 4.5%, they cannot participate much because they can't go beyond 5%. Same is the case with M&M as well. They're already sitting at 3.5%, so up to 5% they can buy. So close to 4.9 is what they can go up to. But beyond that, they will need regulatory approval as well. So, so the worry in the market is if this large block has to come, more investors has to come in, and maybe that explains, the stock is on 7% in today's trade. In fact, there is a lot of shorting as well in anticipation of this news. So if this doesn't come in the next few days, maybe you'll see a bit of short covering as well.
Yeah, RBL Bank is quite a big move. You can't ignore 7% down. Thank you, Nimesh, for all of the details over there. And Nigel, yeah, always take your cheese very, very seriously, right? That's the market for you. Interestingly, by the way, Westlife is up 7-8%. Zomato is seeing a little bit of a cool off. Nimesh telling us that maybe there's a block coming in Zomato as well. But Zomato is down 2.5% after what has been a beautiful rally on that stock. And that's Westlife now. From the time that news came in, not that this was materially damaging for the business. It was always about nomenclature and labeling. It wasn't a food adulteration issue at all, even to begin with. But for what it's worth, the market's sort of taken well to the fact that Westlife has now gotten an all clear from FSSAI. Nigel?
Indeed. Surbhi, just want, before we let Nimesh go, Nimesh, I wanted to ask you, we've been talking about this, maybe there'll be some HNIs that will book profits towards the end of the year. Some treasury books are sitting on big gains.
Yeah.
But I think the bigger problem is there could be plenty of supply that could hit the markets. Tell us more, what are you picking up?
So, Nigel, I was just talking to a very large sell-side analyst over the weekend. And the feedback is, there are offers in at least 60 to 65 companies which can hit the market before the cool-off starts in April, right, before the earnings season kicks in. So expect very large block deals in many companies in the next 3 to 4 weeks. So I've been saying this every day, right? Every day on my charter, there is at least one or two stock. So I can just count on numbers. So Zomato is one we spoke about. Samudra Madison. Look, a large block in ITC is pending. There, I understand they're waiting for the government approval. That 4% block is worth 25,000 crores. So that will suck a lot of liquidity, right? So that's a very large block which is expected. So as I said, more than 60 companies is where I've got a feedback that there are blocks being offered, and there are not much demand as well. So need to see how this pan out over the next 3 to 4 weeks. Additionally, I was just looking at the disclosures of listed companies. Almost 20 to 22 companies where the QIPs are lined up as well, right? Maybe this week you'll see a couple of QIPs getting launched. We saw what Macrotech announced QIP. They're raising 3,000 crores. A couple of real estate names were part of my charter list, so they are going to come with the QIPs as well. So QIP plus the large blocks, which are lined up till April 1st week, till the time there is a cool-off period. There is a lot of supply paper which is going to hit the market.
And that's what could cap gains, actually, for the markets.
But need to be careful in the broader markets, largely on back of the supply which is going to come and hit the market.
Indeed. And the stock that Nimesh just spotted, I think Macrotech, we should just pull up that stock. It's flying away. We had highlighted last week as well. There was some delivery-based buying. The QIP has come. It looks like it's gobbled up the stock at the high point of the day. Surbhi?
Yeah, absolutely. Big blocks coming in. But hey, guess what? It's you and I, right? Retail investors, it's kind of liquidity that's coming in. Till now, all that supply has been well absorbed. We'll see how it goes. But okay, let's quickly move on to another big story of the day. Earlier, our colleague Parikshit was in conversation with the Bajaj Auto's Rajiv Bajaj, who always has a headline for us out there. Parikshit is joining in with some of the key takeaways. Parikshit, Mr. Bajaj never disappoints, right? For me, I was listening to that very interesting conversation. He goes on record to say that he thinks that the fair value of his stock is 12,000 rupees per unit as that, big buyback gets underway. But you tell us, business dynamics, what stood out for you?
Well, he clearly said that Bajaj Auto is going to be firing on all cylinders, and we will see that plan for product expansion, for expansion of the new energy portfolio and capacity expansion from next quarter onwards, from April onwards, in fact. The biggest announcement coming from Rajiv Bajaj was that the CNG motorcycle of Bajaj Auto, which was speculated for launch in 2025, has been preponed. It will now be launched in the next 3 months. This will be the world's first CNG motorcycle, and Bajaj Auto believes that the surveys, the test results of this motorcycle have been very encouraging, and it will be a disruptor in the market. As far as the Chetak scooter goes, there will be a new Chetak offering in Q1 of FY25. Currently, the production of the Chetak is around 10,000 to 13,000 units, and the company wants to double up this capacity to 20,000 units in the next few months. If you speak about the Triumph motorcycle, currently the production is around 6,000 to 10,000 per quarter. The company wants to take it to 30,000 units per quarter by the festive season. Even for the Chetak, they want to expand the distribution footprint from 160 touchpoints currently to tripling this number by the next quarter. There is a new Triumph motorcycle also coming in. This would be the 400cc segment. In the electric three-wheeler segment, a segment that Bajaj Auto entered last year, here Rajiv Bajaj wants to leverage the market leadership the company has in the CNG three-wheeler space, and they want to ramp up capacity from 2,000 electric three-wheelers currently to 4,000 electric three-wheelers per month by Q1 of FY25. So this is the reason Rajiv Bajaj believes that the company is very well poised to grow and add more value to the shareholder. They will be focusing on capacity expansion a new energy portfolio, and also the biggest ever Pulsar is going to be launched in the coming months.
Okay, thank you very much for that interesting chat and giving us that synopsis there. Mitesh is now back with us. 9 minutes left for markets to close, and the Nifty is around 22,350. Mitesh, any BTST calls?
Yeah, so I think, Tata Chemicals looks good to me. Disclaimer, we have recommended to our clients. So that's a BTST with a stop at 1,050. Look for target of around 1,090. And Vedanta is also something which has come on the radar. Very strong movement, closing in the day's high. That's a BTST with a stop at about 284, 283 half and a target of 292.
Okay, we'll take a break here. Mitesh, thanks for that. Vedanta, yes, is moving sharply. Jay Bala will be with us, CMT at cashthechaos.com on the other side. Stay tuned.
Welcome back. We're in the last leg of Closing Bell, and Jay Bala of Cash the Chaos is with us. Jay, afternoon. Good to have you on the show. I just want to start off by understanding what have you made of the slight cool-off that we've seen in the mid-cap market, in the small-cap market, and what you're reading in over there. Maybe any specific individual stock patterns that caught your eye or at the index level. What do you make of the slightly narrower market breadth now?
Yeah, I've been saying for the last 2 weeks that this price pattern of Nifty and the broader market resembles that of a distribution, but we don't have a trend change yet. So markets could still push higher, but we need to the market itself to confirm a break of significant support. Before we can conclude that the distribution is done. I know as an aside, generally, March has a tendency to be trend killers. Big trend killers. The tech bubble burst in March. The grand financial crisis, bottomed in March. So did the COVID lows, and so did the silver high. So March has a tendency to be trend killers both on the bearish and the bullish side. So if we were to have a trend change, it will not be a small one. It's more likely to be Ides of March.
Ides of March. Jay, just a quick word on any stock recommendations, any trading ideas on individual names?
Yeah, see, we've been bullish on PSU names, and the third name that's coming up on my radar now is Engineers India. We are bullish on BEL, BHL, and they've all shot up pretty well. And Engineers India are looking good with a stop below 200 for a price objective for all-time high close to 289, 290. And I'm slightly bearish on Indian Energy Exchange. It's been a rank underperformer since 2021. And since this year's price pattern has pulled back in a corrective fashion to 158, which is 61.8 Fibonacci retracement. So I guess this high could hold and the stock could drop somewhere close to 130 to 120.
Jay, gold is making all the headlines, right? Hitting all-time highs, etc. Now, what is your reading on gold charts? And just tie that in, because we know that over the long term, you've had a big view on the US 10-year. I think you're still holding on to that call of it perhaps heading even higher than 7%. But your thoughts on the way this is all playing out, the NASDAQ, gold, and yields?
Yeah, see, we discussed gold several weeks back, and I had said, the best strategy would be to fade the subsequent move, and gold dropped lower, and and if we had faded the move, it's now moving higher. We could have capitalized on that. But from a slightly higher time frame, I'm expecting gold to make fresh all-time highs, but it will not be too much higher. It's got a topping pattern from a medium-term perspective, and probably this is. Probably because the dollar is set to get stronger. It can pull back in the short term to the lower side, but I think the medium-term trend is likely to turn higher. And likewise, the US 10-year yields could also pull back, probably by some comments from Fed tomorrow. But the German 10-year yields are pointing; they're already trending up. So the world yields curve is probably once again starting to get higher. And as I pointed out in January, the Fed could backpedal and say much lesser cuts than people are anticipating. So higher yields